A humble 10,222 crores marked India's GDP figure in FY 1951, signifying a modest beginning. It took a substantial 67 years from the inception of independence to achieve the remarkable milestone of the first $1 trillion in economic growth. The second trillion required 8 years, and the third trillion was achieved in a mere 5 years. Over the past 9 years, India has surged ahead, surpassing Russia, Italy, Brazil, France, and the UK. From being the 10th largest economy in GDP terms, India has climbed to become the world's 5th largest GDP. As you witness this journey unfolding before you, it is essential to bear in mind that despite the dot-com bubble burst in March of 2000, despite the 26/11 attacks in 2008, despite the global financial crisis of 2008, despite the demonetization in 2016, despite the NBFC crisis in 2018, despite the COVID-19 health crisis in 2020, despite the Russia-Ukraine war since February of 2022, and despite the recent US-Europe banking collapse, where 3 small to mid-sized US banks failed in March of 2023, leading to a sharp decline in global bank stock prices, India has propelled its economy undeterred and resolute, relentlessly pursuing its journey, its destiny to surpass Germany's position and become the 4th largest economy in GDP terms. The majority of the GDP growth has been driven by domestic demand. Now, you've heard all of this information, data, facts and figures, and you might be contemplating switching off the video. However, before you do, let me pose one question to you. Have you achieved returns of at least 1,382%? This is the remarkable return that Nifty has delivered if we consider the investing journey starting from the year 2000 over the past 23 years. Now, consider this. The portfolio of the legendary investor Warren Buffett has achieved a 9.65% CAGR growth over the last 30 years. Thus, with the Nifty boasting a CAGR of 12% over the past 23 years, it has been an incredible opportunity for you. Now, allow me to repeat the question once more. Have your returns outperformed those of Nifty over the past 23 years, over the past 10 years, or even the past 5 years? Since hitting a low of 7,511 in March of 2020 during the first COVID lockdown and reaching a high of 19,979 in July of 2023, the Nifty has grown by a staggering 2.65 times, or in technical terms, 166%. Now, has your performance been equally impressive or even better, considering that you are investing in individual companies and not merely passively tracking the index? The answer likely does not reflect the returns we hope to see in your portfolios. But ever wondered why? There exists a tendency to time the market perfectly, capturing it at its lowest point. The goal is to maximize gains during the market upswings to new all-time highs. In doing so, you wait and wait and wait and hoping that there is an option moment when the market aligns with your perceived fair value. Consider the behavior of an investor back in October of 2016, awaiting the aftermath of the significant event, demonetization. The markets plummeted 6% with the Nifty dropping to 8,000 odd levels. Most investors anticipated a larger dip, perhaps associated with the 2017 budget or subsequent RBI policy announcements. Despite these events, the average investor waited, hoping that Nifty would dip by about 8,000. However, the Nifty soared to 9,700 levels and then to 9,900 levels. In January of 2020, when a promising future beckoned for investment, China's Wuhan incident introduced an opportunity for the astute investors. Despite plummeting to around 7,500 levels, many believed the Nifty would further decline to 5,000, 6,000 levels before they entered the market. Instead, a sharp V-shaped recovery occurred, propelling the Nifty to 8,700 levels in April of 2020. What were most investors doing? Waiting for an even lower entry point. The market staged a swift turnaround with unwavering optimism, swiftly overtaking fears of a recurring COVID-19 wave, leading to an unrelenting surge to around 14,600 levels. Then came the unfortunate but the genuine turn of events, Russia's invasion of Ukraine in the February of 2022. This was the moment investors awaited, hoping to catch the Nifty below 12K levels. The belief was further reinforced as inflation in India soared to 7.79% in April 2022. Supply chain constraints and demand-led inflation led to skyrocketing commodity prices. Corporations grappled with escalating expenses, resulting in dwindling bottom-line earnings quarter after quarter. Many investors perceived the onset of doomsday, with talks of recession and a world veering towards rampant unemployment amid soaring headline inflation numbers. Numerous investors exited the market, while others remained on the sidelines as nations defaulted on payments and crumbled. Weakened currencies succumbed to the mighty US dollars, dashing hopes of emerging revival. Many believed this would lead to the Nifty sinking below the 10K levels and amidst the prevailing gloomy headlines. Yet, what transpired? The markets began discounting a brighter future. Inflation fears waned, and with government and private capital expenditure cycles in full swing, earnings gained robust momentum and consumer confidence resurged. What were average investors doing at this juncture also? Still waiting for a market correction that would render headlines more palatable before entering. By this time, the Nifty had surpassed the 19,700 mark. Most investors persisted in awaiting a propitious low for investment. Now, the reason why most investors failed to capitalize on market returns over the past 5 years, 10 years, or 20 years becomes so apparent. Rather than predicting the market levels, it is wiser to forecast the growth of this extraordinary nation in the coming 5 years, the next decade, and the decade beyond. India's GDP rank ascended from 11th in 2012 to 5th in 2023. Now, what can the rank be in the next 5 to 10 years? India's share of global GDP rose from 2.6% in 2012 to 3.37% in 2023. What can the share be in the next 5 to 10 years? India's share in FDI flows increased from 1.6% in 2012 to 6.7% in 2022. What can the share be in the next 5 to 10 years? India's weight in emerging markets increased from 6.6% in 2012 to 14.2% in 2023. What can the share be in the next 5 to 10 years? India's rank in steel production improved from 5th in 2012 to 2nd in 2023. What can be the rank in the next 5 to 10 years? India had only 4 unicorns in 2012, while in 2023 it gave birth to 108 unicorns. How many more unicorns will India contribute to the world in the next 5 to 10 years? Countless sources of pride underscore that India is a force to be reckoned with, a nation of the century. However, most of us continue to wait for a 500 or 1000 or 1500 point correction to make an entry when the market bottoms out and sell at a peak. Well, you see, you have to understand one thing loud and clear. India's growth story is beyond any individual, beyond any political party, beyond any untoward event, beyond any man-made disaster, beyond any natural calamity. There may be the odd short-term volatility, the odd knee-jerk reaction as seen in the past, but the future is a big thumbs up for India as a nation to invest. The India juggernaut is impossible to stop, and it's beyond everyone's imagination as the country's growth takes a new steeper trajectory every single quarter, every single year from here on. What's more prudent for average investor is not to bet against the India's growth story, but to ride the wave and invest today, if not already done. Our beloved nation, India, has entered a golden era of growth. Recognize this now to seize the moment. If you're still waiting for the markets to correct before you invest, you might find yourself watching a follow-up episode next year with Nifty at 21 to 22K or even higher levels. Well, many congratulations to you and to all fellow Indians as India celebrates its 77th Independence Day on the 15th of August 2023, marking 76 years of freedom. Vande Matram. Jai Hind.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com